You ICT traders are missing out. It's overcomplicated, and that's why you keep losing money. Face it, it just doesn't work. But I have something that's better. I have something that will actually make you money. I call it the VPE. It is the Volume Profile Edge-based trading system, right? It's made by myself and my partner in crime, Soul. But those are just letters. Let's actually break it down for real. For those of you who are new here, my name is Forrest. I invest in stuff, and I think that everybody should too. It is my passion and purpose to help you make as much fucking money as possible. Go ahead, hit that subscribe button. You know you want to. Share it with a few of your friends as well. And if you want to join the best trading community on the block, join Trade Edge. The link is down in the description of this video. We have a 2-week free trial. Use them wisely. We've got the charts open. So for those of you who haven't used TradingView, this is probably the best charting tool out there. Okay, so go ahead and go to tradingview.com, get it downloaded. It is free. I pay for the premium version. I'll make sure to add a link. Now, there's only 4 key levels in my execution system, which makes it so simple, right? You're not worried about all these different types of gaps and breakers and things like that, okay? There's 4 key levels that I care about, okay? Overnight high, prior day high, overnight low, and prior day low. Those are the 4 main levels. There are 2 other kind of key levels, really just one more. We'll just add it to the list right here, which is a naked POC. So we're going to talk about all of this. Now, I'm not going to go super in depth on volume profile on here. I want to show you more of the execution side of this. I'm not going to break down the volume profile totally. Otherwise, this will be a 2-hour video. And I don't want it to be a 2-hour video because I'm tired. And that's the main reason why. But I have tons of videos on the volume profile, not to BS you guys, where I do fully break it down. So peruse those in my channel. So these overnight high, overnight low, prior day high, and prior day low. Why? So let's go a little theory real quick. I promise I'm going to try and keep this video short. We're in an auction. So the candlesticks are actually the story of mass decision making. Okay, it's currently Tuesday. We're actually going to use a trade from Monday, though, as an example of this, right? So we'll select a bar. We'll go back to Monday. Okay, so these candlesticks are the story of really mass decision making. I have this theory. I think that people are bees, right? And they behave psychologically the same way. Okay, in similar sets of circumstances, most people will behave the same way. And then they'll rationalize it after the fact, right? So people will often, try to give you like these intelligent reasons for doing things, but it's purely emotional. It's just I'm telling you, it works. Otherwise, technical analysis wouldn't work in the markets. And it's really hard to break out of that, but we're not going to go too deep on that. So what happens is that at this high point here, okay, at 1600 on Friday, a bunch of people went long, right? So the market was breaking away. A bunch of people went long. And at some point, the last person in the world in the market went long. Okay, that guy got trapped. Okay, so all of these people up top are trapped, right? These are trapped longs. But at some point, we have what I call the last man. So what's going to happen if you imagine you're that person? Put yourself into those shoes. If you put yourself into the shoes of people at these edges, it's really easy to think about what's going to happen next. Okay, this person has been red. So they went long. They're immediately red. All of these people are red. They're freaking out. They're sweating because they're losing money. So what's going to happen when the market comes back to them? Okay, they're long. How do you get out of a long? You sell. So now there's going to be a bunch of immediate sell side pressure, and it's going to increase as we get to this edge of the market. That's why it's so important. More importantly, once we sweep this, that means once we push through the price, we've swept the last man. We've cleaned them up. That means all of the people who were trapped, at least within this time period, have had the opportunity to get out. So there's going to be a relief in sell side pressure. That's why these levels are so important. Okay, so why prior day high and low and not just a high and low as well as overnight high and low? Well, because within an auction, right, we can see the volume. These are the key or pivots for the high volume periods in the auction, right? So RTH is from 9:30 a.m. to 4 p.m. Eastern Standard Time. So these are the edges where the most people are trapped. And then we have the EU overnight auction as well. So the EU levels in that are important as well. So in my execution model, in the VPE execution model, okay, let's go ahead and add another text box here for our VPE execution model. We need one thing and one thing only. We need a signal candle at a key level. That is it, okay? And to take profit, okay, the second thing that we'll do, we take profit at the next key level. At its simplest form, this is what we do. Okay, sometimes you'll hold longer. If you trade on higher time frames, those key levels go beyond just the session and they go more to like the daily high and lows. But this is how it works. So let's add on our session volume profile here. And the next question that you should be asking me is, okay, Forrest, what is a signal candle? A signal candle is a high volume shooting star or hammer candle in the direction that you want the market to go with, again, it has to be at a key level. Okay, I'll say that one more time. It is a high volume shooting star or doji going in the direction, closing in the direction of the way you want the market to go at a key level, at an edge. Okay, we're trading the volume profile edges. Okay, so there are a few different layers here. We have these 4 key levels. Okay, we have here the edge. Okay, technically the high and low are always going to be the edge of the volume profile. Go figure. Okay, we can line these up. We'll see here that this low here also is, you know, coincides with a huge delta change in the volume profile down here. Okay, look at this delta here. Huge change in the volume profile there. Massive change in the volume profile right there. It's disgusting. So let's see if we get a signal candle here. We swept this price here. So 19,589. We push through it. The last person gets cleaned up. There's nobody left. We're looking at it right here on the screen. There's nobody left there. Okay, high volume. This is the opening candle. And you're probably like, Forrest, the opening candle is always high volume. Yes, it is. Yes, it is. That's what's so cool about it. It doesn't matter because people are still telling us what is happening. Here's another way to think about the opening, because then you guys are like, oh, it's not real volume if it's the open. No, it is. Okay, what happens when people show up to play the game? It's one thing to get candles when nobody's playing, but when people show up to play the game, this is what happens. We got a down candle. We got a candle in the direction we want to go. We had a sweep of the prior day high, so we want to short, and we got a high volume shooting star candle. So our next target, okay, let's just go back one more bar, okay? If we short on the close of this, right, we won't worry about like optimal price entry. And honestly, in our model, we really don't care about that. Let's just go short right here, okay? Our TP is going to be the next level, which is overnight low. This is overnight low, okay? So then we have overnight low. So we'll put our TP at overnight low. You can see that that's about 1,500 bucks. Okay, now with hindsight, we know that there was this pullback that we could get in on. That's fine. Don't really worry about that. Honestly, I'm really do not care about drawdown in my system or RR. I'm not going to go on a tangent about that right now. You just need to get in the direction of the market. Okay. Also, generally don't trade without stops. But if I had to add a stop, okay, I know this thing is going to come to at least overnight low. It's probably going to come down into this liquidity down here, though, and it's probably going to do another higher low because we're pushing higher. So it's going to come lower. It'll probably sweep this a little bit. It's not going to come down to here because the market doesn't sweep prior day high and lows most of the time. And so we'll just let it play out. Okay, we go into a little bit of drawdown. All right, if I had to put a stop loss, I would probably put it past prior day high. It's very unlikely to retest this high. Okay, so the RR on this is a little skewed. If I wanted to tighten it up, I could come into like, 30 or 40% of this wick, but honestly, at least 50% of this wick is prone to get retested. Okay, so we take this short. It's a little worse than a 1-1. Now, my actual trade that I took on this, I shorted futures, took puts as well, and I actually went into like coming towards VAL. Like I was like in this area, right? So it's a little more than a 1-to-1 in my real trade. We're going to do the very simple model though. And let's just see if our TP gets hit. Okay, our TP immediately gets hit. We see that it comes down and we start bottom wicking because we're expecting this higher low. We know it's going to higher low, okay? Just off of the technicals, okay? So at that point, it reverses and it comes back into the point of control, right? POC, point in the market with the highest amount of liquidity. It's really that simple. So let's break that down. In the VPE execution model, we want to look for these edges. Now, naked POCs are also other trades that we can take. Okay, let's look at this trade here. Okay, so we're in an up market. I'm on the 1 hour. Okay, we're on the 1 hour right here, 1 hour chart. There's a point of control here from this session on Thursday, April 24th. The market has not traded through it again. It's naked. Okay, why do we call it naked? I don't know. That's just what we called it. It's naked. So as soon as we retest this liquidity, the market needs, and the reason that we will retest the liquidity is because in an uptrend, we need to go and grab people and we want to slingshot out of it. Okay, simple way to think about it as a narrative. Okay, so let's just assume we put a resting long here. It won't let me, but as soon as we hit that price at 19,263, I want to go long. Boom, so we hit it. Okay, so I'm going to go buy. Now, where do I want to put my stop loss? I'm going to put it at the bottom of this node. So while this is a statistical price, we're trading the node. We're in this liquidity from this day. We could probably put it around here or a little bit closer here. I'm just going to put it to where it's fully skinny belly down here. And then for my TP, I'm going to do at least the high because we're in an uptrend. And in an uptrend, you're going to do higher lows and higher highs. So this high will get touched. It seems crazy. You have a big red bar and you're like, man, I want to short this. But let's see what actually happened. Okay. If we play the market forward, it does some chop here. A lot of people got smoked on this, I'm sure. And it immediately goes and does that higher high. Okay. So you have to understand, one, you have to journal in order to do this. But just remember, these are the levels that we execute off of, right? Because of the edges of the volume profile: overnight high, prior day high, overnight low, prior day low, and naked points of control. The other layer to this that's really going to give you massive amounts of edge is the higher time frame volume profile. So on top of these 4 key levels, you want to align your executions with, let's just go to the 4-hour, the higher time frame volume profile. So when we hit an edge, if we get a signal candle on, say, the 1-hour, and we're looking at the 4-hour, let's just get rid of these for now. We're looking at the 4-hour. Boom. All right, so let's use like this time period here. Okay, and let's look at the volume profile. Okay, now there are 2 major liquidity areas here. There's this one and there's this shelf up here as well. So once we get into this liquidity, we just want to take a short, right? So we get up there and we really could just short around this area, and then let's just do our TP around, I don't know, 50% of this price. And that's holy crap, that's 1,000 points. So instead of 15 minutes, let's do the max available. Wow, that's okay. It immediately got hit. Okay, so $20,000 there, right? Just jumping out of that liquidity, just trading the volume profile on the higher time frames. When you have confluence with those 2 things, that's how you get really, really good setups, right? Trading the macro shelves with the lower time frames. Now, this video is already longer than I want it to be, so just wanted to highlight that. Okay, that was a good example of a trade that I took on Monday, that first one that I showed here. Okay, you can just wait for those. You can also see here that we have this high volume bottom wick here, sweeping the overnight lows on this trade here. Another good example. I'll show you right here. This is why this model works so well. Okay, so what time is it? It's 8 a.m. We've got overnight lows here. Do option J. Okay, overnight lows are right there. Let's go ahead and go forward and see what happens. So the 9 a.m. print comes, it closes. Okay, high volume green. It's a doji. Okay, and you can just trade to the other side. Okay, now it took a little while. We got some chop, but it went to the other side. It always will go to the other side. It's really that simple. Okay, so if you want to learn more about the volume profile, check out our community. I do have a course. It's at tradingwithforrest.com/masterclass. If you want the shortcut to make money, this is the system that made me and sold 7-figure traders. No BS, just giving it to you straight. Or you can just use all the free stuff. Everything I know is honestly on YouTube, guys. The course is really packaging it together in ordered and kind of building block kind of way. If you like structure, that's what the course is for, and it'll give you access to me as well. And our course community is really what you get. So a little more hands-on there. Nonetheless, hope you appreciated this. A little bit of free game for you. See you in the next one. Peace.